Moving on here to OCGN. This one kind of an honorable mention, but it's because it's a biotech stock, and biotech is not one that I personally trade in, but the lesson here, it's more of a lesson on a chart. This chart is a textbook long-term resistance breakout, and going back 5 years, you have to look back over 4 years for the last time that OCGN cracked this $2 level. So this long-term resistance breakout, it's been years since this level was tested. It shows with clear rejections. Each time it rejected, it rebounded hard, showing that there was a lot of shares exchanging here. And we've tested it multiple times. We got one back here, 2, 3, 4, 5. This is the 6th time. The more times we tap on that wall, the more times we hit that wall with our hammer, the closer that wall gets to finally giving and being brittle. This is a resistance level that we're shaping back up into. And what I wanted to talk about here was just the involvement, the volume, right? Volume is key on these long-term, looking over multiple years. And the volume on OCGN is starting to come in here. It's not, we've had some $15 million volume days on OCGN. We're going to need to see that for some type of follow through and a break of this key level. We're going to need to see over $10 million days regular. We're going to need to see that day that trades 20 million, 25 million, and get us up into the territory that we tested years ago, 2-3 years ago. Because we had some days on OCGN that traded 50 million shares. When we tested that key level, we have to see that volume starting to roll in on this name. And it's a biotech, like I said. These things, they move heavily on these news events. Personally, I'm not the type of person to stay glued to the screen and be listening in for a call on a phase 3 test, or even be locked in to see when it drops how the stock reacts. I don't have any interest in doing that. And so for me, the biotech is very news driven. But this one is just one that when you do read the news they have going on, I mean, they do have some exciting trials coming up. With that being said, I'm looking at the chart is what I look at. And I've seen that when a chart tests a level this many times over this long a period of time, you have to keep an eye on this. The $2 level could be a launching pad for this stock straight to 3. Or the $2 level could provide a short-term resistance. If it does, if we're not able to break this $2 level, I have something set up here that's really it's a risk to reward spreadsheet. And it's how I manage all my trades. Unfortunately, too many traders struggle because they don't manage the risk properly. And they don't look at things from a probability standpoint. I know too many traders out there that are extremely technical, that know exactly how to look at the charts, they know all the patterns, and they know exactly when to take a trade. When they get into a trade, they're lost. They're not sure how to manage it. TradingView has this long and short position feature. You can go to any stock, anytime. You can set your long or short feature, and you can determine just what type of risk reward the trade has. I set up OCGN, and I just did a hypothetical. Let's say you invested $4,000. You threw $4,000 in this, okay? And you threw $4,000 with the idea here on the chart that this thing could potentially make a dollar run up to $3, and we could capitalize on a full dollar point move on the stock. Well, you're buying, let's say tomorrow at $1.88, and let's say you want that 4-to-1. Well, that means if the stock drops 20 cents and goes below $1.60, you're done. You cut the position, your risk got hit. Now, I don't know if that's exactly the type of risk you're comfortable with. I know a lot of people that will bring this down here and raise their risk more, right? And say, hey, if OCGN gets below $1.25, let's say it loses, 55 cents, 60 cents, then I would get out. You could do that, but your risk reward goes to 2-to-1. Me personally, I like risk rewards on swing trades. to fall around that 4 to 1 RR, which means on OCGN, what I'm looking at here is simply risking the $1.60 and the round trip of the last 3 candles. If we see OCGN and it comes in here and it just gives up, 20 cents in 3 days, well, unfortunately your risk got triggered and you're stopped out of this trade. But you also look at that and you say, hey, anywhere between the $1.88 and the $1.60, I want to be able to still have ammunition to get in this thing, to buy this thing to the upside, and not throw my $4,000 in all at once. Maybe throw $3,000 in at it. And if the stock comes back 8% tomorrow, I throw the last 1,000 and I top off the position, knowing if it drops that 20 cents, I'm taking the L and I'm moving on to the next. You think about risk every time before you think about potential upside. This is how you always stay in the game and you never lose over a long term. You determine your risk and then you look at where the stock can move. And guys, I'm telling you, if it can clear the $2.15 level, $2.11, it's headed next to $2.50. And over $2.50, next resistance I'm seeing is a $3 run. Blow off. You got to imagine if it gets that volume rolling in, if it has that involvement, $3.15 could be a potential for a blow off. With that being said, that's $1 from where we are on a $2 stock. I'm not going to be that guy that holds all the way to the very top. I'm going to lock in a core of my profits when that thing gets moving in my direction immediately. Immediately moves in my direction, lock it in. The market paid me, take a win, take some off the table. You've still got enough in there. You've got of your $4,000 still another $3,000, $2,500 sitting in the position. Write it up again. Not all the way to your take profit, but write it up again, hold some and take the rest off at $2.50. This is the type of stuff that keeps you in the game for home runs, especially with options. If you're trading options, this is a very, very worthwhile risk to reward and profit-taking type of guide. Because when you're trading options, time's working against you with your option. And when you see profit, you got to be ready to take some profit before the market just eats it up with time. That's my risk reward breakdown on OCGN. I spent a good amount of time on this, mainly for myself for a refresher, because this is how you manage options trades when you're trading into key inflection levels. It's just what works best. Moving on to the technicals. And also, if you're asking what option do I buy, it's a great conversation to have. It's an important question to ask. And it's something that we're going to get into more in these videos. I really think what's working right now, is breaking down the technicals on a long-term perspective. That's what most people are reporting to me is helping them the most. And it is the most important, is to get that screen time. But guys, this stuff right here, just knowing how to manage a trade, these types of things are what separate the people that are very, very successful at this and the people that just kind of are mediocre and get the same results. Options, we're going to get into it more, but let's keep it simple today. That's a great risk reward guide on OCGN to help people manage trades.